Welcome everybody to our weekly group call. Beginning of the new year, so pretty excited for the year ahead. So thank you guys for jumping on, and to the members that have been with us for a while, really appreciate your continued support. We've also had quite a few new members join recently, and also our first marketing letter that has been sent out. So we basically had the 3rd of January was our first time that we've actually sent out a group email to all of our complimentary members that, just alerting them to what we have as a system for DTB traders. So, definitely getting a bit more outreach for the system out there. So welcome to those guys who have jumped on this call too. No doubt you're looking for a solution for the year ahead, for a way to trade that is going to be more effective and consistent. So welcome to you guys. Right, so we had a first look at our signal chart this morning. So the signal chart is something that we share on our weekly group calls. And I think this is probably the 160th group call or somewhere very close to that. That we share weekly, and it's we've had a 3 to 4 week break, obviously over December, over Christmas and New Year. So we break about once a year for a month or so, 3 to 4 weeks, and that just gives everybody some a break from seeing me and hearing me every week, right? But, more importantly, we know that the banks and institutions are not really active during, late December, even from mid-December to the first week of January. So it's not really a time where we focus on our trading. And that's one of the reasons why we haven't been running our automated strategies over the last few weeks, because we've got very unreliable, data that is actually happening. And the same will go through now with, the next couple of weeks ahead, because we don't have any really good, accurate, normal historical data to evaluate for our trading strategies. We're not going to be focusing on our normal automated strategies to begin the trading year. But there's definitely other solutions that we can use and take place, or we can use instead, which will be as effective. And, for some people, it might just be the magic bullet that you guys are looking for in the system that can help you become more consistent. All right. So, no results to view because we don't have any results. Our signal chart, if you guys have been looking at some scalping opportunities, even over the last, week or 2 or 3, there's still movements in the charts, obviously. And obviously our signal charts giving, those high probability entries, would have definitely assisted you guys, in generating some consistency over there. Okay, so for our weekly agenda today, we are going to be looking at first of all, our baseline wick trader strategy. So our baseline wick trader strategy, we just had some small technical issues with the daily stops and targets that were being overhit or overshadowed. So those have been actually fixed up on that with a lot tighter management of daily stops and targets. And then we're going to look at the flending baseline. So the flat and trending baseline charts, and we're going to compare this to the minute bars. So if you remember on a few weeks ago, I actually discussed, why the minute bars, are maybe not as reliable as one would hope for when actually doing trading. So we're going to just explore that in a moment. Okay, so I'm just going to get rid of this signal chart for a moment. And I want to actually bring up a different workspace. So I'm going to close this one. I'll close that workspace. And I want to bring up a new chart. And what we'll do is we'll stick with the MNQ because that has been, the main focus for a lot of you guys working on this. And first of all, we don't need to really bring up the baseline wick trader strategy. All you need to know is that, the daily stops and targets are working as they should. So, just, do your optimizations and that on that. But we're not really going to be working on that strategy for the next week anyway. But, at least you know that if you do want to run optimizations and work with that, you can do that. So I'm going to bring up this chart. So while this is loading, I'm just going to bring up another chart in another window. And I'm going to make this just like a 5-minute chart like this. Okay, so a lot of people will be looking at a chart like this, and then they'll be trying to make trading decisions of, what price is doing. Of course, there's hundreds and hundreds and hundreds of different chart patterns that people are reading about and studying about and watching videos. I'll just have to switch the chart. So, sorry, there we go. So we know that there are, hundreds and hundreds of different chart patterns for, 5-minute bars. And then some people are trying to do some stair-stepping type of thing, and looking at these bars, we obviously have a lot of different price movements. We have different candle wicks. We have prices opening and closing at different levels. So for a new trader, this can be quite daunting to actually look at. People spend years and years and years studying different candlestick patterns and trying to make heads or tails of what the market is doing. So, this can be quite overwhelming for a new trader, right? I mean, imagine if you're looking at this for the first time, or even looking at this for months and months, trying to make trading decisions. It's very, very tricky to be able to determine what price is doing, where it's likely to go next, and where are the price levels. I mean, what are the guaranteed price levels? So, many years ago, after studying candlestick analysis and trying to create automated strategies around it, I came up with the idea of having trending and flat baseline charts. So trending and flat baseline charts, so like this is a flat baseline chart, and I'll just quickly duplicate this in a new screen and create a trending baseline chart. So I'll go to my data series and go a 1 and 369 like that. So while that's loading, so a flat baseline chart basically offers you guaranteed price levels. So if you look at the chart, you'll see that you're going to have different wicks that form, but ultimately the price is going to return to a specific level. So looking at a chart like this, you can tell immediately that, there are guaranteed price levels. So the price is either going to go and form a new baseline like it did over here, or it's going to return to a previous baseline, and the same thing continually happens. So the benefit with this is there's absolutely no need to study any sort of candlestick patterns at all. I mean, it's completely irrelevant, candlestick patterns, because you have guaranteed price levels. So, there's very few guarantees when it comes to trading, but, when you're looking at a chart like this, one of the guarantees that you have is price levels. Like, for an absolute fact that the price is either going to return back to the baseline. So price is going to form these wicks and then return back to the baseline, or the price is going to break down to a new baseline and form that baseline. So that new baseline will be a previous baseline too. So depending on where the price is historically and where it has been historically, you're going to see those price levels. So, when you're making trading decisions based on a chart like this, And say, for example, you enter a trade on the baseline, whether it's a buy or a sell, a limit order on the baseline, and you target the price towards the next baseline, and you have your stop where the price of the other baseline will be. I mean, you got a 50% chance of hitting your stops and targets, right? So I mean, that's because it's guaranteed levels. The price has to go to one of those baselines. It can't do anything else. So a lot of the issues with this is there's absolutely no guarantees of any price. You're going to have different size wicks. You're going to have candles opening and closing all over the place. You're going to have, completely different size candles themselves. You're going to have, a lot of stop hunting being taken place on this because they know people are watching these 5-minute bars. And then you've also got the trending baseline. So a similar type of approach there. You know that the price is either going to return back to the baseline. So like this is a trending baseline, and you can see if I just activate the properties of this chart, and I go to the date range, you'll see that this is from the 3rd of January. So like that is what the price has been doing since the 3rd of January. It has been on a trending baseline up. Okay, so that is what it has been doing. So again, the exact same principle happens over here, is where you either have a trending baseline going down. If the price goes up a specific guaranteed level, again it's guaranteed, if the price goes up a guaranteed level, it's going to form a new baseline. As long as it doesn't return that value, the price is going to return to the baseline. So, looking at a chart like this and seeing, where price is, and, you can see on here, where price is in relation to the baseline. So you've got, there's the baseline start, and this is currently where the baseline is. So there are some tools that can actually help you determine, where exactly the price is in relation to the baseline. And one of those is we'll just go down to the indicator list over here, is the trending baseline. So you've got the DTB Wick Trader indicator, which is for the trending baseline. And we're going to choose 370 here. So we always combine the first number and the second number. So we're going to do that. And just wait for that to load up. And then while that's loading, we can, continue looking at this chart. So, one of the things I like about the flat baseline chart is you have the opportunity to trade both sides of the baseline. So as you know, the price is either going to go up or it's going to go down. This gives you the opportunity to be able to, trade both sides. Whereas looking at a trending baseline, which is this one over here, you basically more than likely going to be trading back towards the baseline, and there's only one baseline to trade back towards. So either trading towards the baseline or predicting a baseline break. So again, we have guaranteed price levels over here. So the price is guaranteed to either return back to there, or it is guaranteed to go over there. Those are the two guarantees that are offered over here. One of those is going to happen. Like nothing else is likely to happen. And it's impossible for anything else to happen because the price is guaranteed to go there or there. That's it. There's one of two options. So when you're looking at a chart like this, there's absolutely no guarantees of where price is going to go. I mean, it's literally there's no way of determining at all where price is likely to go next. Okay, so that is that, and the exact same thing happens with the flat baseline. So like there we see we're on a wick at the moment, and the same thing over here. So if I go to my indicator list, and I go to my indicator that says the flat baseline, which is this one over here, and I go 370. And while that's calculating, we'll switch back to the trending baseline. So, this is giving you the current price and where it is in relation to the base. So as you can see at the moment, it's at 50% of the value of the baseline. So the price has basically gone down on the wick. It went all the way just past the 76, all the way almost up to like 90%. And then it's retraced back to the 50%. So it's still a good idea to be able to determine, what is happening on the wick. But, looking at minute bars might be a lot more confusing than looking at other bars to determine what price is going to do. So here is the flat baseline chart. And as you can see, the exact same thing applies over here. The price is guaranteed to either go to that level or back to the baseline. That's the only thing that price can do on these charts. So it definitely provides a lot more, clarity when you're looking at price levels. If you can see guaranteed price levels, it makes a lot more sense, and you're able to see a much better picture than when you're looking at bars that open and close all over the place with different size wicks and candles and all that. So that is one of the main things that I wanted to cover on this call. And we have an automated strategy that is able to trade these baselines, whether the flat baseline or the trending baseline. But I'm not going to cover too much on that strategy today, because I'm actually going to be completely revamping that strategy over the next week to be able to work with the trending and flat baseline charts a lot more precisely. So there's a few things that I'm updating on that strategy. But this week ahead, I think it's an absolutely amazing thing to be able to do, is to have a look at these charts in great detail and find your way of being able to read them. So obviously we have the different signal charts. So if we go to our data series and we go back to like a 2020 chart and we choose 5 days on there, we'll just load this up. Now, ultimately, if you've got multiple screens, this is definitely the way to be looking at it, is, having different charts on different screens. But while that's there, I'm going to go and load up our signal charts. So obviously, these signal charts for new members are built into the DTB system. So everybody has access to these signal charts. And as you can see, there's quite a few of them. But the one that we focus on the most is the Show Me the Money signal chart. That's the one I display at the beginning of every call. So when you are looking at a chart like this, as you can see, we've got, different breakout levels. We've got the coloring of the bars. So this provides a really clean picture of, what price is doing. So when you're looking at that chart, and then you're looking at your trending chart, your flat baseline chart, you can see, okay, well, the price is currently on a wick. So, you can basically see that, there's the start of the wick at 215.60. So if you look at the price, you'll see over here that this is where the price basically was at the top of a wick. And then we've had, different coloring of bars over here, different support resistance levels. And then we had a breakout marker left behind over here. So the price came up all the way to 215.3, 215.31. And, which is up over here, and then, drop down again. So this chart helps you determine, what price is doing on the wick. So, this is having separate charts, where you're able to, you can have this on a separate window like this, where you're actually monitoring the chart. You're having your trending baseline chart like this. So some of you might even if you got the one screen where you are monitoring what price is doing, you have that, and then you also have your signal chart below that can help you identify what is likely happening on the chart. What is more likely for price to do. Is it either going to return back to the baseline, or is it going to go form a new baseline? So we've got these levels on here, and as you can see, the price is right here near the 76. We have got a huge sell-off over here. All these bars are gold. You can see we had breakout markers left behind, price running down. So the only thing that is going to be a hindrance for price over here are these Fibonacci levels. So we have got very, very strong levels over here, which is the 38, the 50, and there's quite a few different levels over here that might be preventing the price from actually going down to this baseline. So we have to be mindful of what price does around those levels. And as we can see previously, from previous days, we've actually had the price fall at those levels or fail at those levels. So, could this be a time where it's going to break through? Well, we'll be able to see in a moment, depending on how many breakout markers are left behind. So obviously, if we have this price continue running down without any reversal breakout markers, then we're more than likely going to see a baseline break. But, continually looking at what price has historically done around those levels is going to give us some, clue as to what likely is to happen. So obviously we've had times where, the price has bounced off these levels, but then we've also had times where the price has completely just, smashed through them. So initially you would have had some resistance around these levels, but then, breaking through. So, looking at these signal charts is going to definitely provide some guidance into how to trade this. And for some of you, it might just be a scalping thing. You might be scalping between specific levels. So you might scalp from the 76 to the 61, or the 50 to the 61 if you're doing it in reverse. So depending on what you're seeing on your signal chart like this, you're able to make trading decisions. And the really awesome thing about the charts that are not time-based is, this is giving you exact price levels. And again, it's another form of guaranteed price levels. So as a very simple thing over here, if I just maximize this chart, we have, again, guaranteed price levels. So we know that this price is either going to return to the baseline, which is there, or it's going to go form a new baseline, which is over here. So those are guaranteed price levels. So, this is what, this is the big difference when you're trading, charts that offer guaranteed levels. Now, and some of you might, want to go for larger candles. Like you've got this is a 2020. So every single candle is going to be 20 ticks in width from start to beginning. And if a price retraces while on a candle, it has to retrace that 20 ticks beyond its open for it to form a new baseline or a new candle. So as you can see, that guaranteed price level hit. So, the same thing can be applied with all different bar sizes. I mean, some of you might even go for like a 50 and a 20. I know this is a bit of a larger chart, but, whatever different values that you can work with, they are there. So I might even just go to the indicators over here and remove, these indicators just for right now. And I actually just want to add the Fibonacci levels, because that is the, probably one of the most important, or it is the most important indicator that exists in the world of trading, in my opinion, because that is telling you where the institutional support and resistance levels are. Okay, so again, the same thing about guaranteed price levels. So when you are looking at a chart like this, you have guaranteed price levels as well. So you know that, when the price moves, if the price reaches over here, it's either going to break, it's either going to go up to form, the top of the baseline, or it's going to go and form a new baseline, which is this one over here. So, the price is either going to do, it's either going to do one of two things. It's either going to return to a baseline or form a new baseline. So whatever chart size you decide to work with, it is so much better, working with something like this. And I might even just take off the break at end of day. So when I remove the break at end of day, what actually happens is it uses the previous day's levels and it just continues with them. So that's what that does. So exact same thing over here. So this price here is either going to return to this baseline over here. It's either going to go to this level, or it's going to go up and form a new level. I mean, that's the only thing it can do. So, if you're looking at scalping the market and you're entering positions and you're entering limit orders at specific levels, you can have very, very, very specific targets and stops in place to be able to, enter your position. So like as an example, that would be over there. And exactly that, if the price, if the price had to go to this level over here, if the price had to go to this level over here, that is where the new baseline is. So as you can see, you got a 50 and a 20 bar. So immediately that, those are the guaranteed levels. There's nothing else the price can do. So again, looking at a minute bar or any other chart you're looking at, you're never going to see that type of thing. So it definitely provides an invaluable way of being able to scalp the market on any different bar size, to be able to see those guaranteed levels. And some people, especially during the US session, you might go for a much larger chart. So let's go for like 150 and a 30 as an example. So, there's the same thing over there. So, you're looking at guaranteed price levels. We know all the time what price is going to do. And you can even convert this into a trending baseline. So you can say, I want to see a 30 tick increase in price. But if the price drops that 150 ticks, then I want to see, a baseline break. So it's the exact same thing there. You got guaranteed price levels as the price goes up. So every single time the price goes up 30 ticks, it's going to form that new baseline. So 30 ticks. As soon as it drops that value that we've set in there, it's going to form a new baseline to the downside. So, that is the benefit of looking at a chart like this. Now, there's one other thing. So we'll come back to this chart over here. So there's our flat baseline. So there, as you can see, there's our guaranteed price level that we marked off earlier. As we said, the price was either going to do one of two things. And, what it did is it returned to the baseline. So looking at that move that we had over there, it is, plus minus 180 ticks from where we saw the price earlier. Now, some of you might also want to have more clarity on what is happening on the chart, but you also only want to look at the one chart. So one of the cool things that we can do is go into our data series, and we can go and add another data series to our chart. So we're looking at this, and let's go with a, we've got a 369. So let's go for a 37. Let's go for a 37 bar size. Okay. And then what we'll do is we will add this to the same chart. So as you'll notice over here, we've got our first chart, which is the flat baseline chart. And then we've also got our signal chart, which is our smaller wick chart. But we want to make sure that the panel that it is in panel 1. So by doing that, we are combining the two different bar sizes, or the two different bars, into one very specific chart. So what this is doing here is it's showing us the baseline where price is guaranteed to return to. So again, we've got, let me just go to my data series and center this on scale, just so we can get this all nicely centered. Okay, so again, we have, there's our guaranteed levels. We've got a guaranteed level of the price either, forming a new baseline, or returning to the existing baseline, or going to another baseline. And everything that we see in between, so, as you can see here is the baseline that we're looking at over here. What we're seeing in between is this 37 bar that we put into place. So that is giving us the activity of what is happening on that wick. So as these wicks form, you're going to have, these bars form, and they are going to, show you what the price action is on that specific wick. And if you want to make that a lot smaller, instead of a 37, you can even go to an 18. We're trying to do it in equal increments to this, to the wick. So because we've got a 370, we basically want to try provide similar or the right amount of ticks to be able to accommodate the value of the flat baseline chart. Gosh, I'm brand new year, you see, guys. I'm a little bit. I was also up until quite late last night just doing some updates, so it's been quite a busy weekend for me on the side. But here we go. So we've got the action of the wick and the price returning to the baseline. So as soon as the price returns to the baseline, then we have, the price looking flat over here. And it's only when the price deviates from the baseline are we going to see, that price action. So let's go back to our chart that we had earlier. I'm just trying to locate that. Oh, hang on. So we've got my trending baseline chart is this one over here. So, here we go. So we've got the same thing over here. So we can do a similar thing over here with the bars by having the, I shouldn't close this because I'm going to get too confused with all these charts that are open at the moment. So obviously there's our signal chart, there's our trending, and there's our flat. So, looking at this now, we also want to be able to determine, okay, well, what is price doing on that wick? And then obviously we have different tools that can be used. So just like you saw on that signal chart, you're able to add indicators to that specific data series on there that is going to give you, ideas of what is happening on that chart. So as an example, and we'll just add a couple over here. So we've got our SI indicator. So, this to me is one of the best ones to use. And we're going to apply that to our inbuilt data series. So that one over there. So very often the values of 2 and 2 on this SI indicator are quite powerful, but they can be adjusted to different levels, and optimization on these is also pretty good. But looking at this for absolute basics to start trading, to understand what price is doing, this is a good way for the coloring of the bars to determine where price is likely to go next. So here you will see there's your baseline, and also it's worth mentioning that as soon as these bars turn a specific color, they're going to stay that color permanently. They're not going to repaint. So obviously the green bars are going to be up bars, or buy signals, and the red are going to be sell signals. So when we're looking at price on the baseline, and here's obviously a very nice example of here's the beginning of the baseline, and as you can see, this is the wick over here. So the price formed this wick over here, and all of this price action over here, all of this price action from this point onwards, all the way to when the price returned to the baseline, is all on this one wick. Okay, so that is why you're seeing one wick over here, and then you're seeing all these bars in between, because what's actually happening is it's giving you the price action of the price while it was on this wick before it returned to the baseline, or until it returned to the baseline. So looking at this, you're able to enter positions based on the coloring of the bars, first of all. So if the bars turn green, you can predict the price going up. When the bars turn red, you're predicting them going down. So, if you were in long positions trying to predict a baseline break, because remember, again, at any time you look at these charts, you're either going to have, the price go there, or it's going to go over here. So, you constantly know where those guaranteed price levels are. So, understanding this type of a chart, and understanding like the candles in between, the bars in between, the different signals in between, it's going to give you a lot of perspective when you're running an automated strategy. So when we cover the Medina Wick Trader strategy next week, and you're looking at charts like this, you're going to be able to control the strategy using its buttons to choose long positions only, or short positions only, even reverse positions. So I'm introducing a reverse position, so being able to trade away from the baseline as opposed to towards the baseline. So there's going to be strategy controls that you guys are going to have access to, that are going to be on the trading chart. And while the price is moving and forming these different signals based on what the price is happening on the wick, you're able to control the strategy itself. So you're able to control, when the strategy starts trading, when it stops trading, which direction it can trade, the stop ticks, the target ticks, where it takes its first trade. I mean, there's quite a few different things that you can have control of, but it doesn't help giving you guys major access to that strategy with all its updates until you understand the fundamental basics about trending baseline and flat baseline trading. Now, some of you guys have been working with this for years. I remember 4 or 5 years ago, I was part of some Facebook group, and I introduced my first tools to the public, saying, hey guys, I got this automated strategy. Do you guys want to try it out? I'm just offering a free trading group to make this work. So I did that, and I realized, oh my God, I've actually got something pretty powerful here that people really want to work with. And this was one of the strategies that we worked off. We worked off the Medina Wick Trader strategy, trading the flat and the trending baseline. Man, people were like out of this world shocked. They were like, I've never seen charts like this before. We've always been stuffing around with 5-minute charts, not knowing, where price levels are. But, this is providing an absolutely clear, defined, definite way of being able to see where price levels are. So that became like a real hit. So the point is, when you're looking at a chart like this, you want to give yourself the highest probability of success. So as an example right now, because the bars are red and the price is below the baseline, you don't really want to be taking long trades now, right? In fact, you want to be looking at short trades as soon as those bars were red back over here. So, while you are monitoring the settings and while you are working with this, like you're going to be choosing short trades only, when the bars are red, and you're going to be staying in that even when the price is below the baseline, because, this could end up being a baseline break in the opposite direction. But it could also be, it could also come down to the 23 or the 30 or the 50 and then bounce up again. But you won't know that until, the signal changes, the bar coloring changes. So, quite a few really cool things over here that you can look at. Now, I did want to show you, some people are they're so tied to their minute bars, and, they really want to, stay with them, and they want to understand them and work with them. So, if you really wanted to do that, let's create a plan for you also, right? So let's go to our data series, and let's go to this chart over here, and let's go to our minute bars, and we choose, let's go 5 minutes. Okay, so we're gonna go 5 minutes. We're gonna adjust that. And what this is basically going to do is instead of it doing a guaranteed price level bar, what this is doing is it's using a 5 minute bar with the baseline. So exact same thing over there. Now, obviously the indicator that I'm using is probably not the best one to use for this because it doesn't work with minute bars very well. So, this one over here, we can say, well, let's go to our shadow trading indicator. So we're going to apply the shadow trading indicator, and we're going to attach that indicator to not the baseline chart, but we're actually going to attach it to the 5 minute chart. Okay, so what does that look like? Okay, good. So what's happening here now is you've got a 5 minute bar in between your flat baseline chart. So you still got the wicks of the flat baseline chart. You still got your guaranteed price levels. Like you can see the old markers are still there. But now you've got a 5 minute bar. So like this is what the price is doing on a 5 minute bar. Okay, so here's the signals from the shadow trading indicator is going to give you help with that. But you still got guaranteed price levels. So this is a way for people that are stubborn and want to stay with their minute bars. You still have an opportunity to be able to understand and see guaranteed price levels of any value that you want to set, but still have the flexibility of trading on a minute bar chart. So again, you can have your stops and your targets at guaranteed levels. And this is going to, still provide you the flexibility of, knowing those levels. So like over here, so like there was a previous baseline over here, and it's very easy to see where the baselines are because they're actually highlighted in green and yellow. So when the price is on a baseline, the current price is always going to be yellow. So you always know where the baseline is. And this is a previous baseline. So that's why it's showing green, which is where the price would need to go to form a new baseline. So from here, you could see that the baseline was over here. And, there's the next baseline. So it went up. It's 370 ticks to go form a new baseline. So these are the 5 minute bars in between. We had a divergence over there. The price retraced a little bit and then ultimately went and formed a new baseline. So obviously all the bars were green. So you would not have been looking for a short trade in that type of situation. And that's going to apply to every single time you see the baseline. So any baseline that you go back and look at, there's your baseline. There's your few candles to go form the new baseline. these are the gaps between. I mean, it looks a bit messy going back like this, but you know, it's going to, yeah, it's not great going back on the chart because it kind of it doesn't show you the baselines properly. But actually it does because, you know, there's your baseline chart. There's your baseline. See, it jumps a bit when you got, because it's trying to update on the right. Son of a gun. But anyway, you get the point. There's your baseline chart. I mean, there's your baseline, and then that's where the price went to go form a new baseline. There's your candles, divergence. We had a brief turnaround in gold, then back green again. So, I mean, this is constantly happening throughout the day. So, you know, you're going to see the wick, and then you're going to see what the price is doing on that wick. So there's that way to look at it, or obviously the way of, you know, being on, you know, on the guaranteed price level charts. So, you know, some of you will look at this and think, oh my gosh, you know, I'm still getting inconsistency. I still don't know what these price levels are. The price is jumping all over the place. It's, you know, it's so difficult to read that. You know, well, that's what happens when you're looking at minute bars. Whereas if you had to switch over to a, you know, even a 2020 bar, which is, you know, the DTB bars, these are giving you guaranteed price levels of the price within that wick. So there's no different size wicks and candles, because every single one of them is the same size, because they, you know, are guaranteed to be certain values. So we'll let this one just load up. Give that a second. I wonder if I need to adjust. Okay, I'm getting a bit of I've been doing too much on here. So while NinjaTrader is thinking, it's best to completely do not touch anything type of a thing. That's just, you know, what you have to do with this is, yeah. So sometimes that's gonna happen, right? It's gonna crash NinjaTrader because it's not able to deal with the workload of you know, changing things a lot. So obviously showing you a lot of different things on here is making it, you know, be, you know, unresponsive. So I'm just going to log back in over here. Okay. Okay, so sometimes when that happens, so that's another important thing to look at. So whenever NinjaTrader crashes, which I'm sure you expect it to happen a lot, you've got to look at your task manager, and then you've got to, you know, just see if it's stuck in here. So looking at this is not really looking the same as my other computer. I just want to check if there's something stuck in here for NinjaTrader. Okay, it doesn't look like it, so I'm just going to reopen that again. Okay, so we'll just cover the end of this, and then we'll cut the call over there, because I think we've covered a lot of information on this. So if I go back to my flat baseline chart, which is like a 369.1, and I just go for 10 days on there. So, you know, you can choose your break of day end on or off. And the only difference is that you're carrying over a baseline from a previous session. So you're having a continuation of the baselines. Okay, so that is where we currently were. So very simple again. So as you're starting off, you have your chart like this, and then you go into your data series, and then you go and add in another instance of your data series. And here you can choose, you can choose your, this can be on or off, it doesn't really matter. You can choose your data series for the second instance, but if you just add it like we did over there, you're going to see it's going to be in two different windows. So going into here and scrolling down to the panel section, you will see over here, you're able to choose the panel. Now, before we choose that or change that, this also provides you a way of seeing what the price is doing while it's on a wick. So you're going to see a blank space on top over here of, of what the price action is on that wick. So some people might even like that. It might even be clear for you to, look at that. But I do prefer, seeing it on one chart like this. And then obviously you can go into your indicator settings and you can go and add in your different values that you use. So, some of the most powerful ones obviously we saw was the SI indicator, which we added. And we always got to make sure you add the indicator to the correct data series. So I'm going to apply that. And then I'm also going to add in the breakout volume. So breakout volumes are going to provide you also insanely accurate indicator, signals to be able to jump in and out the market. So if I go to my breakout volume over here and I just add 2 or 3 instances of that. So we'll keep the one as the white, and then we'll go template load, and let's go for the crimson, and let's go for the template. Let me just go one more. Template loan orange. So those are the 3 that I'm going to use. Now, again, it's very important to be able to link these indicators to the correct data series. So you want to be able to load those to the smaller data series, because that is where you're primarily going to be looking at for your entry signals. So switching to them, apply, and OK. All right, so now you've got a bit more information to actually work with. So you got your brick walls, which are these ones over here, and you'll see there'll be gaps as the price returns to the baseline. But you've also got your breakout volume markers. So, going back into the indicators, we also want to see where our baselines are, right? So some of you might also not like to see the Fibonacci levels of the baselines, but you still want to see very specific levels. So over here, you've got, first of all, the tick distance counter. So tick distance counter is very cool because it'll tell you on the baseline how many ticks the price has deviated from the baseline. So there's that. And then you've got your other specific levels. So there's this one over here that's called ticks above below baseline. And you can even add a few instances of these. So you can say, I want the first marker to be at 50, the second one to be at 100, the next one at 200. I'm just making up numbers here. And, this is going to be tied to your specific thing. So there you can see, okay, well, if the price touches this level, it's 200 ticks away from the baseline. It's currently 17 ticks from the baseline. There's a red breakout marker. So we've got a breakout marker over here. The price, just broke down a little bit, but then we had a breakout marker left behind over there. The price went to the baseline. So, this is the type of things that you can be looking at on this chart. Obviously, you know that the yellow line is your baseline and the candles in between is your smaller data series that you've embedded on top of your flat baseline chart. So, this is going to become a lot clearer for you guys, once you start, really looking at these charts. It's the absolute best way to scalp the markets, first of all, but this is also a precursor to be able to trade the Medina wick trader strategy very effectively. because based on what you are seeing on these charts, you're going to, like I said, you're going to control the buttons of the strategy. So, that's something that is going to be vitally important for you guys to work with. And sometimes you can get the most amazing signals, there, as an example, there's the baseline. Okay. There is the baseline. We had the price break down, and then we had a brick wall signal. We had green bars all the way up until the new baseline break. So when you're seeing this in real time, you're not going to be entering short positions, right? Because you know that there's a high likelihood until the bars change color that, that's going up. And it's only when the price reached the new baseline that it go up slightly, return back to the baseline over here, went up. So, you're going to have the times where the price is just going to be bouncing around a little bit. And for those really awesome times, we've got a specific indicator that is phenomenal at calculating sideways movement. So looking at your shadow trading indicator and adding that to the same data series. Remember, you want to keep all of your indicators connected to the same smaller data series that you are using. Okay, so that just gives you a little bit more information, okay, of possible divergences. You got the momentum line moving around. So, there's a lot more that you can actually see of what price is doing. You got the coloring of the bars. Now, obviously, you got to choose what is coloring the bars. Is it the shadow trading indicator that's coloring the bars? Or is it the brick wall indicator? I would use the brick wall indicator because that to me is still the most powerful signal that we have. So I'll untick the paint bars. And what that's going to do is it's going to give me the coloring of the bars based on the brick walls, but it's still going to give me the arrows based on the shadow trading. So, the system that we have over here is there's so many different permutations of how to actually work with it. And there's so many different methods of being able to trade it effectively that, you can spend years and years and years just working with different charts, working with different size charts, working with guaranteed price level charts. How important has that just been, isn't that like a light bulb moment for a lot of you watching this? Guaranteed price levels is so much more beneficial than looking at 5-minute bars that are up and down and different size wicks, and you got to understand 100 different chart patterns, and you got to study all different time frames. Every single thing can be put on a plate for you on one chart that can give you all the information that you could ever dream of needing, but also not too much information. Imagine looking at a 5-minute chart and you trying to find 20 different chart patterns. You're looking for head and shoulders, you're looking for dojis, you're looking for hammerheads, you're looking for, there's hundreds of different chart patterns. Your mind is going to be so freaking confused. It's not going to be able to focus on anything. You're going to have so much doubt and limitations built into everything that you do because you don't know where any price levels are. You got no idea of any guaranteed levels. At least with a situation or a setup like this, when you enter a position, you know for 100% certainty the price is either going to go up or down, and it's going to hit these guaranteed levels. It's like it can't do anything else. Whereas, like a 5-minute bar can have a long wick, it can have a short wick, it can be a small candle, it can be a thick candle. It's all over the place. So the less amount of confusion that you give yourself, the better. And just one final thing on this indicator. So when you combine the shadow trading on this chart like this, you might want to just not have the momentum line. So you can hide the momentum line. And I only say that on this specific chart is because as the price goes back to the baseline, the momentum line gets a bit out of whack. Just because of that. So that's why I put the option there to hide the momentum line. So as you can see, all of these charts and all of these indicators are designed to work together. They're not just bits and pieces thrown together by all different developers. You have a system of tools here that is designed, for them to work together. And that's how you're able to, read the charts more effectively. Cool. Let's leave it at that, guys. Thank you so much for jumping on the call. We covered quite a bit. Let me just see if I can get this thing back up. Yeah, we covered quite a bit. Next week, we're going to focus on the Medina WicTrader strategy. So a lot of what we covered today, like I said, was like the basis for that strategy. Now, the Medina WicTrader strategy is the most profitable strategy that we have by far. It completely destroys anything else that we have, and it certainly destroys anything else available on the market. I mean, that's an absolute no-brainer. So we're going to be covering the details of that strategy next week and how we can work with it on the flat baseline charts, the trending baseline charts. But I encourage you guys this week to be loading up the charts like we've done on this call. And some of you might even choose to use different indicators. I mean, for some of you, having the shadow trading on here might be a bit too much. You might decide, you know what, I'm going to just use like a nice little trend following indicator. So that's also a nice option to use. So I'll quickly add that on. So I'm going to go to the trend following, and I'm going to add that to that very specific bar like this, and click on apply and see what that looks like. So, you can add different types of indicators to this chart, but definitely work with the flat and the trending baseline charts, because that is what the Medina WicTrader strategy really excels at. It excels at trading those charts. And, having more understanding of what price is doing on those wicks is going to give you a much higher probability of having successful trades, because when you're controlling the strategy settings, like the start, the stop, the long only, the short only, the different retracement levels, you need to have a deeper understanding of the flat and the trending baseline charts. And as you can see, it's not a complex chart. I mean, there's no chart patterns. There's one of the most amazing things about the trending and flat baseline is there's absolutely no chart patterns to actually even think about, because it's very simple. The price is either going to go up to the next baseline or return to the baseline. There's different size wicks, and the price is moving on those wicks. So immediately you're removing hundreds and hundreds and hundreds of different chart patterns from your mind because they don't even exist. The chart patterns don't even exist on here at all. And yet you can trade it very effectively by keeping it extremely simple, because you're not having to cloud your mind with hundreds of chart patterns. So guaranteed price levels is the ultimate way to trade. I mean, I haven't looked at 5-minute bars for the past 6 years. I mean, it's just like I've got no interest in trading a 5-minute bar or a 1-minute bar, 10-minute bar, 15-minute bar. I mean, they're all just made up bar values, right? I mean, as we discussed on a previous call, the exchange isn't sending out 5-minute bars. I mean, those are all made up bars by the trading platforms. Anyway, so, no professionals are really looking at those bars anyway. They're looking at guaranteed price levels, and they're looking at volume. So those are the two most important things in trading, is volume and price levels. That's it. There's no time in the day. Cool. Thank you guys, and have a fantastic week. Please focus on these charts this week. I mean, it's really going to help you. Don't go and do auto optimizations on the last 3 weeks of historical data, because that's crap data. You got none of the banks trading. You had contract rollover. You had New Year's, Christmas. I mean, none of the professionals will be trading. So all the market data is basically crap. So it's only as we develop new data over the next coming weeks that we're able to get accurate, reliable back data. So I would say from today, from Monday to tomorrow, your time, is when the banks and institutions are actually back at trading. So this is when the big boys are back and the professionals are back at trading, and all the retail guys will, have to start adhering to their rules and their way of trading. So from this week on, you'll be able to do optimizations, but the previous 3-4 weeks, I wouldn't even bother with that. But the Medina wick trader strategy is just trading wicks. You see, we're just trading candles, we're just trading baselines, and it's trading towards guaranteed price levels. So let's focus on these charts this week. If you want to do scalping, if you want to do trading, predicting baseline breaks, even if you're entering positions at a baseline, predicting either a baseline break or baseline break down or up. I mean, you still got a 50% chance, right? If you enter a trade on the baseline and you target the next baseline on either side, with your stops and targets, you guaranteed to have a 50% success rate already, immediately, without having any intelligence or any understanding of what's happening on the chart at all. So that's one of the big benefits of guaranteed price levels, is you immediately have a 50% chance of hitting a successful trade. It's crazy. Okay, guys, thank you. A lot of rambling today, but I've been going through a lot of things over the last few weeks. A lot of ideas, a lot of, honing in on different techniques and strategies and things that I'm working on with regards to the tools. We're going to have a very exciting year ahead. Okay, guys, thank you. And we shall chat next week, same time. And thanks again for the new guys that have jumped on. Hey, guys, cheers and see you then.